Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, December 12th, 2025. S&P 500 currently sitting at 68.39. I'm David Zarling. I'm here with Ian McMillan. Can't believe the year is almost over.
Almost over. We got like 2 weeks.
Crazy.
2 weeks. Maybe closer to 30, but yeah, that's that.
You got your Christmas shopping done? Or are you canceling Christmas?
Whew. After a day like today, sometimes I don't know, man. It's okay. It happens. It happens. Do I have... No, I need to get on that this weekend. I have some stuff.
Yeah, I have confidence in you.
But probably not where I should be at this point in the game. It's okay.
I feel like it's like that every year.
You can always pay for expedited shipping.
True story. Just get it faster from Amazon.
Yeah. They're implementing 30-day shipping or 30-minute shipping. Guess 30-day shipping wouldn't be too much of a...
I was going to say, what kind of press release is this? Amazon to introduce 30-day shipping. Well, I don't know if that works.
Not helping their stock price.
When we're sitting, when you look at the S&P 500, we're just a little bit below last week's close. During the week this week, we had been to new highs. From a really near-term time frame, strong pullback today, but one day doesn't make a trend. What are you seeing out there? Like, what are some things we want to touch base on for our listeners this week?
Yeah, so kind of a weird week overall. I mean, we're in a range.
Well, and that's what I love about markets is markets and I get along because we're normally weird.
I'm glad that you found a friend in the markets. Market's not always my friend. I mean, sometimes. A lot friendlier to small caps. Don't say that too much on this podcast, but got to give credit where credit is due. They were the first all-time highs. They've held up pretty well. Everything kind of getting hit today, but small caps. And on the flip side, the weakness this week for sure. I would say over the last couple weeks, but the growth tech, all that type of stuff struggles. It's hard for me to say that it's over from a outperformance standpoint, but could be.
Well, I do think it's interesting. You got industrials making new all-time highs, financials making new all-time highs, even European financials making new all-time highs. You mentioned small caps, gold making new all-time highs. Silver.
Not Bitcoin. Still struggling.
Emphatic no on that.
Also range bound. I think it looks pretty weak. Looks kind of good. We're setting up for another leg down, but we'll see. Still will be fascinating if that continues to fall. I think it'll be fascinating. I hope we're not let down. I hope the headlines are juicy.
Oh, can you imagine the narrative?
What if we find out Bitcoin was in the Epstein files?
That's crazy. Well, okay, so
it'll be something like, I don't know what they'll come up with.
So as a technician, if this counter trend / consolidation from November to now is a flag,
or Bitcoin. Okay.
If that's a flag in technical terms, we're measuring to 60,000.
Yeah. I think you could do that.
Which would be a 50% correction. And the Bitcoin maxis would be like, yeah, I mean, that's pretty normal. Like we have all these 50% corrections.
Oh, yeah, I'm sure they'll be pretty chill about it.
Who are you? You got paper hands? Are you weak? Can't hold on to Bitcoin for 50% correction? Now, there's some truth in that, but I don't know why we got to take that risk, especially if we're below the volume weighted average price. since August of 2024, which is a huge level, a major low. And that volume weighted average price is 92,900. I don't know why you feel the need to be involved in that below that level. But I'm with you. I think the narrative would get relatively loud if you're down at 50 to 60,000 on Bitcoin, especially considering what precious metals are doing.
Yeah.
Right. You're an idiot if store of value was gold, but then you look at Bitcoin or gold versus Bitcoin, and it's looking pretty good.
It is. Gold versus Bitcoin. I mean, you definitely wouldn't, as of right now, you would want to continue to be long gold. But if you're long gold, then you should actually be long silver based on that chart. You can't own gold. That is outperforming. Looks good. But then if you're going to own silver, then maybe according to the charts, you should own silver miners. And if you're going to own silver miners, maybe you should own junior silver miners. See, there's so many tiers you can go down in the relative strength playbook.
Yeah.
It's really fascinating.
Yeah. I like the way you're talking. You're just saying on the risk spectrum, if you're going to see silver do well, if you're going to see precious metals do well, silver is outperforming gold. If you're going to see that continue, you see silver miners outperform silver. And if that's going to continue, junior silver miners versus regular silver miners outperform. Is that what you're saying?
Yeah.
It's good. We got materials overall, which gold miners fit into. I think it's fascinating to see Lindy, the largest weighting in XLB, at almost 15%. If this is a false breakdown in Lindy, right, this level that it's at currently, which were the lows from May 24, Jan 25, April 25, if we reclaim those lows and that's a false breakdown above, and we remain above 412, man, what does that mean for materials overall? Fascinating. And then you throw copper in there.
Copper looks good. VGK Europe would be at all-time closing monthly highs right now. So you got Europe continue to grind its way higher. You know who really still stinks? China.
Yeah.
They don't do anything. This chart does not. Relative chart has really gotten weak as everything else in the world has continued to move higher. And when I say everything else in the world, I mean, that's kind of the case. Not that much sarcasm there. A lot of stuff continuing to look good. You even got Brazil participating. You got deep dive to that, but that's okay. It isn't a strong uptrend. The relative chart, I mean, maybe we're getting, so it's Q1 of this year, right? Q1 this year when foreign had good quarter and then kind of, I wouldn't say fizzled out. I mean, they did give some of it back. Kind of just kept up with the S&Ps really since August. But maybe we're setting up for another Q1 foreign equity outperformance. Now,
I mean, when you see things like Japan and Germany,
emerging markets, I think look better than developed. So we'll see. What do you think about energy?
Ooh, well, I've got lots of energy for this podcast, but I don't think that's what you're talking about.
Yeah,
like XLE, like energy.
Oh, like a 5-hour energy
drinks.
Energy drinks. Yeah, I mean,
I'm not opposed to energy drinks, Ian, but when you look at XLE versus S&P,
terrible.
And what I think is interesting about it is, right, that was one of the top outperformers coming out of the COVID bottom into fall of 2022, but it's been an opportunity cost since then. And I would argue in a pretty controlled manner. Like when you look at XLE versus S&P or energy versus S&P since then, pretty steadily falling relative 200-day falling price. Now, I guess if you were to just say on an absolute basis, there might be some pent up energy here. You know, if you're looking at something like XOM, the largest weighting, I mean, that's on the
Yeah,
verge.
needs to do
We've
it.
been, yeah, it's been in a range. Let me put it this way. I feel a lot of the same vibes. And again, investing is not about feelings. I'm just reflecting what we're seeing in the price charts as technicians. That's what you do. ExxonMobil, this range from the beginning of 2023 on an absolute basis, if that were to break to the upside, I feel a lot similar to like JP Morgan is to the relative S&P. And so I think some clues would be, because I know we're going to get into talking about growth versus value. If you're going to see ExxonMobil break out to new absolute highs and JP Morgan break out to new like 20 some year relative highs, is that indicative of value carrying the ball forward versus growth? Time will tell, but ExxonMobil hasn't done anything for 3 years. But if it does, I mean, that to me, I look at ExxonMobil, and if we're going to look at energy broadly, ExxonMobil's got to be, I need Pat Mahomes to be Pat Mahomes.
Yeah, I definitely want to see that moving higher. Another question. Yeah, I can pose it as a question. I do find it interesting. Staples. So what do you think about the fact that Staples, yes, relative chart is doing what we wanted to do? I find it interesting that Staples is the only sector below its absolute 200-day moving average? Yes, I believe so. I mean, materials was there on Monday, but Staples looks terrible. No, we don't need it to look amazing. I just find it interesting. I don't necessarily have a reason for that. I don't have any theories.
Well, I think, right, as technicians, if you want to see the bull market continue, the best environmental information would be Staples participating to the upside on an absolute basis, but underperforming on a relative basis. And I think as long as XLP is holding $70, $75, $76 from an absolute basis, and you're seeing it underperform the S&P, that goes in the risk on bucket. That goes in the bull market continuation bucket. I agree that the absolute chart's kind of a mess, but as long as it's above 75, 76.
I take that back. Walmart looks great. The rest of the top 10. I mean, look at Costco, for Pete's sake. This thing used to be, I mean, it was
a leader.
Absolute beast for years and years and years and years. And, well, I mean, we kind of did this, I guess. This could be another 2021 to 2023. It was about an 18-month period there where it consolidated quite nicely, actually. So maybe we're doing that again. That'd be cool. But
what I love about being a technician is we can create any combinations that we want to analyze price and the interaction of supply and demand among market participants. And if you look at Walmart versus Costco, I think you've brought up a really good, interesting thing for this podcast, and that's we've broken the rate of trend in Walmart versus Costco that goes back to 2004.
Wow.
I don't know what the narrative is there, right? Because when I think of Costco and Walmart, obviously I think about consumers and I think about Sam's Club. I don't know what the narrative is here. And I actually don't really care. It's just you've brought up a good point that Costco used to be a relative leader and now it's Walmart.
Can't even get cigarettes to go up. Cigarette stocks look terrible. Well, they don't look terrible, but maybe that's all it is. I mean, these things aren't at like all-time lows. Like a Colgate Palmolive. It's been in a drawdown since last September. What do you think's up with that? It's just very, very, no one wants to own.
I think it's risk on. I think, everything's opportunity cost, right? I've got $1 sitting on my desk. Where do I put it to be a good steward and get return on my funds? Is it Palmolive, or is it aerospace, or is it semiconductors, or is it growth, or is it value? That's really how investors need to be thinking is rather than narratives is opportunity cost. And I think your Walmart thing is just a fascinating, we didn't even talk about this before getting on here, but look at Walmart versus Amazon. Is there a story coming for Walmart in the next 6 to 18 months, right? Because markets are a future discounting mechanism. And I'm not on here recommending you go buy Walmart. I'm just saying when you look at some of these relationships, you sit here and go, there's a potential Walmart story here unfolding before us, because now you're seeing Walmart outperform Costco and Amazon. That's interesting.
Walmart and Amazon have had the same return for the last 8 years.
Yeah. Would you have guessed that? Would you have won that?
I would not have.
Right. I think the other relationship that I also would have in the same boat that you're talking about is we're 0.7% away from small caps outperforming.
I don't know why we do what we do.
And I know you've got,
I know why we do what we do.
You and Russell 2000 kind of beef, and I get it. But wouldn't that be something if
I'm ready? I'll do it. But it's not like I've never not given him the resources to go be something. I'm there. I support him. I buy my little 5% position, and I say, okay, I'm ready.
Well,
and then he's the one that never follows through on his part of the bargain.
So I think your skepticism is warranted, because only twice in the past 10 years has small caps outperform the S&P on an annual basis. And because of that, on a relative basis, again, opportunity cost, negative 44% versus the S&P.
But then, like, if you zoom out all the way to like IWM versus S&P, IWM versus SPX, could be the same for IWM SPY. Oops, let me see.
I'm zoomed out. I'm out. I'm ready. I'm actually looking. Can you believe this? I'm looking at annual candles.
Annual candles.
12-month candles. And only twice in the last 10 years has IWM outperformed the S&P 500. And then the full-time effect of that is a 44% drawdown. Like, if you've been invested in small caps, you've given up 40% of gains versus S&P.
It's tough. I don't know. When I look at a long-term chart, I do feel, I don't know, this could also, are you going to get a V bottom off of a
10-year correction? Yeah, I don't know.
Yeah, but this is also where the .com bubble right here, early 2000. We'll have to see.
Yeah, we'll see. We will. And that's the beauty of studying price and being Bayesian statisticians, is you wait for the new information to come in. But I think the fact that you've got materials doing well, especially when you look at miners, industrials new all-time highs, financials new all-time highs, which includes American Express, Goldman Sachs, JP Morgan new all-time highs, broker dealers new all-time highs, insurance, heck, even European financials new all-time highs.
Jets,
airlines. We talked about that last week. They followed through this week.
Are looking good. The transports end up holding out. I think we were talking about that. Yeah.
Their
IYT
looks good.
As long as it's above $75, I guess you're pretty good. Green today on a pretty red day. I don't know about cruise lines. I haven't looked at cruise lines in a while. Not too hot. They were earlier in the year.
You ever done a cruise?
I have.
I've never done one. I don't know how I feel about it.
I've done about, I don't know, at least 10.
Wow. So then you like them?
Well, only one was my choice to go on.
You were held hostage? Wait, you were held hostage on the other?
No, yes, I did like them. Oh my God, I'm going to get a text about this from my parents. Yes, I did enjoy them. But yeah, every spring break we went on a cruise growing up. This was like late 90s, early, not like, this is not, I'm not going on cruises nowadays. We don't need to get on that topic. That's a pretty common, those videos tend to float around the internet. But I'm talking about like late 90s, early 2000s, peak America cruises. Yeah, they were pretty cool.
Okay. That's awesome. I know Nana's listening. I know she's Nana, I'm sorry if I caused any wedge between you and your son.
You're killing my inheritance right now. So,
Well, I guess I don't know. So I gotta confess, I also had never been to Disney before, and this was like, I don't know, 7 years ago. I was a skeptic. Went there, amazing.
you liked it?
Now, yeah.
Would
Now,
you
I
go
don't know
to
what
Disney?
it, I'd be definitely be open to it.
Okay.
My kids are older now.
But if your kids were the
But
same that you took,
yes, yeah, I would try it. No, I mean, the stock charts got me sketched. I mean, I'd be like, I wonder what's going on there. But
you don't buy products from companies whose charts are on a downtrend?
yeah, I do not get the COVID shot. Will not.
Well,
Will never do it.
What if that was a belief that people had before they buy your product?
They look at the stock chart.
If it's below a 200-day, can't do it.
I mean, Moderna and Pfizer.
Imagine all the women. Starbucks is below a 200-day. Imagine all the women that would be. And men, I'm not trying to be sexist. Yes, men drink Starbucks. I'm just saying their target market is women. But yeah, below 200-day, you can't get your coffee.
Yeah, might be a thing.
And then you want to go to the local small business coffee. Well, they don't have a stock. I'd have to say, can you ask them for a stock chart?
Yeah, could you show me your price chart, please? It's like the inverse of what I can't remember which major investor was like that. You should invest in things that you know you own. I think you should invest in the charts that you own.
Yeah.
Like invest in the things that you know, the charts that you know, invest in those. The products that you know, I'm not sure.
What am I going to do with semiconductors, Dave? Am I just going to buy a bunch of semiconductor chips and stock them in my storage? I don't know, Kate. Dave said I should buy these.
Yeah, why is our garage a data center? Why do we have so many Blackwells in here? Now, if your wife knows what a Blackwell is, she needs a better Christmas present.
I don't think she does.
That's fair. But in a roundabout way, I don't know how we got here. I would be open to trying a cruise because I've never done one. So how can I have an opinion? But I've always thought to myself, a big city.
Dave, it's so human. You're not human if you don't have opinions on things that you've never tried.
Oh, I should have an opinion about everything?
Oh, yeah.
There's only correct opinions in their mind. I just never been like, oh, yeah, I'm super stoked to be on a floating city in the middle of the water.
I mean, they are pretty cool, dude. I mean, they are cool. I mean, yeah, like my memories of cruises are pretty cool, pretty chill, especially as a kid. There's so much kid stuff to do and other kids to play with. Like, I don't know if your kids now would enjoy it. Like teens, I mean, yeah, there's like teen stuff to do.
I mean, because if you didn't have like the water slides
You
and
do
the buffets,
do the excursions.
there's an excursion on a cruise boat?
Well, yeah, that's what when you get at the ports.
At the port.
Yeah.
But it's the in-between part that bothers me. It's the in-between, like I'm basically on a...
You get the alcohol card. So unlimited alcohol. It used to be like $50. I don't know. It's probably insanely expensive now. For the whole week.
Wait, so as a kid, you had an alcohol card?
No, I had a Coke card.
Oh, nice.
Yeah. Unlimited cherry Cokes, Shirley Temples all week. I mean, come on.
Done.
For like $25?
Now I know why you like cruises.
And then you get the alcohol card and you just chill. Plus there's like free entertainment. There's like rated R comedians and stuff.
Okay.
Yeah, I mean and then there's lots of stuff. Sports bars. Always games going on. Like you can go play bingo or you can... I don't know.
What I say next is going to be completely unfair. If it wasn't for the alcohol card, the buffet,
yeah, the buffet,
and the distracting entertainment, I'm basically on a prison ship because I can't get off the thing.
No, you probably don't want to get off. Could get off. I mean, you can get off,
but it might be not great.
I wouldn't suggest it.
And I'm kind of a busybody, so that's the part. It's really about.
It's not seasick. Like, are you the type of person that has to wear like a patch?
No, it's just like if I want to go to the next town, I'm going to go to the next town. But you can't really go to the next town on a cruise ship. So it's my fault. It's not the cruise ships. Like they're doing their job. It's just me with the idea of being on a floating city that I can't leave. it's kind of like I'd love to visit New York, but if you told me I couldn't leave, I don't know if I'd be down with it. But I suppose if New York stopped at a couple Caribbean beaches, I'm cool. So I probably should just try it so I don't not be such a pansy about it.
I just like to. I'm going to segue into a shout out. If you're still listening to the podcast, and you haven't turned this off yet, David and I both really appreciate that. We're about to get back on track.
We are. Okay. How about this segue? Speaking of cruise ships, how about Japan? New all-time highs.
Like in the Nikkei?
Yeah.
Well, dollar weighted's probably even looking better now. Yeah, Nikkei?
Looks good. European financials, new all-time highs. What do you think about Latin America?
Mexico? I was looking at Mexico yesterday.
Argentina, Mexico.
I mean, Mexico, it's not at all-time highs, but it's at like 11-year highs.
Well, Peru makes sense that it's doing what it's doing because, it's heavily weighted towards metals and mining. So I think...
No Venezuela funds.
Interesting.
Probably would be in a downtrend.
Probably.
No El Salvador funds? Yes, there's got to be.
We're not seeing any.
Well, what about Argentina? Because that got hit and then popped back up. Yeah?
Yeah, I think Argentina, near all-time highs on a relative basis continues to hold up pretty good at a pretty important level. We had this island reversal back in September. I think that's significant. Peru, Chile, you mentioned Mexico, Brazil, kind of setting up here.
I like how you said that.
Yeah, it made me sound like I knew what I was talking about. Brazil, Chile.
You might be 10% Portuguese.
Well, it's my red hair. Everybody knows this. You mentioned small caps. I find the mega cap versus micro cap chart interesting.
Mega
MGC.
Man. Yeah.
Mega caps versus micro caps.
Yeah, doesn't that look like that trend's over for a bit?
Yeah, I mean, could you see a 2026 where it's value and small?
Okay.
I could.
So is this going to be underperformance, or are we still so weighted to like, oh God, if tech goes down, it all goes down?
Yeah, right. Your basic question is if tech is going down, is the bull market over, or is it rotation into value and small?
Yeah. On a relative.
That's a great question. And my answer
basis, then yeah, that's probably not great.
My answer is, if you got small caps going up to new all-time highs,
and RSP, right? RSP's already at all-time highs.
Yeah, and that's before the S&P 500.
Yeah. I mean, how?
Even EQAL, Equal Weight Russell 1000, new all-time highs. So rotation to the rest of the team rather than Pat Mahomes. It's the other part of the team that's performing. That's not a bad thing.
New York Stock NYSE Composite, all-time highs.
Dow Jones, all-time highs.
Wow, S&P and NASDAQ. Let's do it. Let's have a whole 12 months of
differentiation.
It'd be cool.
All right, let's talk bonds and interest rates.
Oh, man. Well, I keep hearing about a rate cut. Did we get a rate cut yesterday?
Yeah, it was one of these days. There was a day where Jerry was talking.
Yeah, Wednesday. So that's it. It's Friday. Wednesday, rate cut. We've had like 3 of them, I think, since September. And rates have gone straight up. Well, not straight up, but they are significantly higher than, I will say this, we're back to where we were in early September with 30-year treasury yields.
Right. So the bond market is zigging while Jerry is zagging. It's going to be interesting to see how that plays out.
TLT still getting hit. So,
and I would say junk bonds versus intermediate bonds still holding up. Local emerging market bonds doing well. That's risk on. Even convertible bonds. So these are risk on for fixed income and all the things that we mentioned reaching new all-time highs. So just because tech, doesn't carry the ball here, doesn't mean that other things aren't doing well. And we still have the dollar below 100 and a 200-day moving average.
Yeah, dollar definitely falling, doing what you would want it to do, I guess. Down to 98, 96, I assume. And there's not much between 96 and 89. So if we were to get through that, yeah. So I guess it's so far, we're going to chalk this up to falling dollar is good for stocks. I think that's kind of what the environment we've been in since January. I mean, dollar index peaked early January, up around 110. Like I said, we're sitting around 98, got down to 96.
Yeah, it would not surprise me.
So far, I guess we're saying this is good for stocks. Subject to change at any moment, though.
Well, and I think, when you look at something like VEU, so international stocks minus U.S. stocks versus U.S. stocks, the fact that it's holding up this well. I mean, if you were to see, international and value and small outperform in 2026, this is what it would start to look like.
Yeah.
So in 2023, a little over 25% of stocks in the S&P 500 outperformed the index. In 2024, it was about 30%. In 2025, we're currently at about 37% of stocks within the S&P 500 outperforming the index. So think about that. That means 63% of stocks in the S&P are underperforming the index. Do we finally get a year like 2021 or 2020 where the majority of stocks are outperforming the index, which opens up all sorts of thesis then that this is actually the start of a new bull leg rather than the end of a bull leg, if you see that.
That'd be sweet.
But if you're going to see small caps outperform, if you're going to see international outperform, that's indicative of the first leg of a bull market rather than late. Time will tell. And it probably would be important for me to highlight the supporter of this podcast, the Adaptive Select ETF listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. We covered a lot of ground, Ian, including floating cities that are prisons with buffets and entertainment. Anything else you want to cover before we ask our listeners to give us a high ranking and share us on their platform of choice?
I don't. Interesting week overall. The average stock continues to, let's say, do better under the surface. Yeah, I mean, Russell at all-time highs. Not a lot to be too spooked about right now, which bodes well. I mean, I think that kind of puts the I don't know, breath was a little weird there for a couple months. As has been the case, nothing really came of that as far as major drawdown in the market. I would say that's been, RSP, IWM, Dow, NYA, hard to be bearish. Yeah, what's that look like?
Yeah, we got column X's.
Okay.
Affirmation of breadth expansion.
What is the number?
In the mid 50s.
Okay.
So middle of the field, hopefully heading towards the end zone if you want stocks to go up.
But not too far.
No.
We don't want to get to like 82.
Yeah, we don't get 80s and 90s. 80s and 90s probably exhausted the breadth
We got
expansion.
a long way. We got a long way to go, is what you're saying.
I do.
Not like we're getting to X, we're back in X's and we're at 73.
Right. And that's the thing. Like, a lot of these things that we just talked about today in this episode it kind of points to early stages of another leg, but that's kind of hard to believe, right? That's probably not the consensus out there.
That would be tough. So we're at what? We're going to go, how many straight years of 20% returns will this be? Let's say if we close today, obviously no You said earlier we're 16% on the year
for S&P.
for S&P. Yeah, so probably not going to get, I guess, so S&P total return is going to be like 18. I mean, maybe you could get 2 more percent in 18 days. I don't know, but another good year so far. So I still hear a lot of, I can't, like, when are we going to get a bear market? I can't believe we haven't gotten a bear market. Still a lot. I still think that there's a lot. A bear market has to be 2008. I think that is a really big mantra amongst people my age. Yeah. A bear market has to be, because that's what a lot of them, I mean, I remember it too.
How quickly people forget that it was 22 and 23. We had a almost 30% correction. And even earlier this year, people forget that March and April was a minus 20% correction.
Yeah, intraday, I think I'm pretty sure we got to 20.
Yep. So we've had 2 bear markets in the last 5 years.
Well, COVID, if you include COVID, 3.
And if you include 2018, that's 4. That's 4 in 7 years. 4 minus 20+% corrections in 4 years. Definitely not the easiest markets, but I don't think we get to sit here and say, well, when's the bear market going to happen? Well, do you even study charts?
Yeah.
Do you even use price, or are you just using your brain and watching CNBC? Yeah. Do you even use a chart? So we're going to have another two weeks, a little bit more than that for the end of the year here. We'll see how we end up. But even though tech's, I guess you could say that's a shot across the warning bell, like if tech's not going to hold up. But if we're going to rotate into industrials, financials, local emerging market, bond debt, I think that's pretty indicative of risk on. And so you got to err on the side of the bull market continuing.
I agree.
Well, thanks for being on here again. We'll be back again next week. We asked everybody listening to this to share it and give us a high ranking on your platform of choice. It's a great compliment to us, and we appreciate it.
Have a great weekend, everyone.